Welcome back, my dear students. In the previous lecture, I have explained about the basic characteristics of the chart pattern on a price action chart. From this lecture on, we will learn about the strong chart pattern, that is a double top chart pattern. Now in this lecture today, I am going to tell you about the formation and basic characteristics of double top chart pattern on a price action chart. So let's start. Double top pattern is a bearish reversal pattern that occurs at the end of an uptrend. It is formed when the price makes two consecutive peaks that are equal in height with a thought in between. This pattern recommended that the buyer are losing momentum and the seller are starting to gain control of the market. It can be used as a part of your trading strategy and frequently used in the forex and equity market as bearish signals. Main characteristics to a double top pattern on a price action chart. First peak. This is highest point reached by the price of an uptrend. The thought. This is area between the two peaks where the price retraces between attempt to reach a new high. Second top. This is the second attempt to reach a new high but failed to do so and fall back to the thought. Neckline. The neckline is drawn by connecting the low of the thought and it acts as a support level. As you can see the price action chart, when price has moved up for an extended amount of time and then peak or swing high are formed while price hits a certain resistance level. Here price has reached at highest point of an uptrend and first peak has confirmed. And now you can see the price going pullback for selling pressure and hit the support line. Here neckline has created on the support line and price cannot break the neckline, then price rises up again for testing the first peak in the resistance line where it cannot break it to the upside. There should be an equal distance in term of time. Now that the second peak has been established and price has rejected again. As you can see that the second peak or swing high was unable to break the resistance level. Price will fall to the support area again for retesting support level. So market price fall down and price again hit the previous support level. And then we will be sure that the pattern is confirmed. And then you will wait for breakout in the support level. As you can see that the price break the support level and chances is high that market is short position. You will place short trade entry and set the stop loss at least 3 pips above the lower high and set the initial target profit at least twice size of stop loss. Let's see the real chart example. This is odd NZD on our chart. You will notice that market price rises up for reach the highest point of an uptrend and then peak or swing high is formed in the resistance level. Here price has rejected and first peak is confirmed. Now you can see the chart. After rejection price will fall to the support area for certain period of time and hits the support line. Here neckline is created. And then price again rises up for retest the previous resistance level but it unable to break the resistance line and second peak is confirmed. And then price again rejected, then price fall down again for retesting the previous support level. This situation is created for you because market is running indecision. You will wait for breakout. While price break the support level, then you will be sure that pattern is confirmed. So in this moment, you will place a short trade entry and set the stop loss at least 3 pips above the lower high and set the initial profit target at least twice size of a stop loss. So not more today. Have a nice day. Goodbye.